So in the past 7 days, we have already taken a look at over 20 different stocks. I hope you guys are enjoying the content, but let's keep it rolling. Today, we're gonna take a look at 6 more stocks. So if you guys have been watching, you would have noticed that the most of those past 20 stocks we've looked at have all been heavy growers. But on today's episode, I want to change things out. I want to take a look at the 6 giants right now. And these are stocks that you might be sleeping on right now. We're going to try to find out which one has the best valuation, which one has the best price targets, which one is growing the fastest, because you should also have these types of stocks in our portfolio. If this is your first time here, make sure to hit the subscribe button. Don't forget to hit the thumbs up. And remember, I am going to be live streaming here on YouTube, taking a look at stocks you want me to look at. So let's get started. But before we begin, let's take a listen to today's sponsor. I want to thank the Motley for sponsoring this video. The Motley is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You guys know I love finding new investing tools and resources to help me scout out new growth stocks. And right now I have a discount for one of my favorite services the Fool offers. Through the Motley Stock Advisor services, you get access to a ton of expert stock picks. Every month you'll get 2 new picks that are aimed at growing your wealth and to help you realize your financial goals. Stock Advisor's average stock picks have done amazing returns. If growing your money is something you'd like to do more of this year, you can visit fool.com/Jose Najarro or click on the link below for access to my special offer and decide if the Stock Advisor is right for you. Thanks again to the Motley Fool, and now onto today's video. Alright, so like I mentioned, on today's episode, we are going to take a look at the 6 giants: Facebook, Amazon, Apple, Netflix, Google, and Microsoft, my all-time favorite right now. So what I want to do is see which of these 6 are the cheapest and which I would enjoy buying at these levels. So first, what I want to do is we're going to take a look at the prices of each. I want to see how volatility has moved. So the first stock we're looking at is Facebook. This is traded under the NASDAQ as ticker FB and is currently sitting at $306. I want to take a look at the past 6 months, because if I look at the past year, right, that's when pretty much all of COVID started. So returns have been insane. But in the past 6 months, Facebook has returned 17.13%, and it currently has a market cap of $870 billion. Next, the next one we're going to take a look at is Amazon. Amazon is currently sitting at $3,400, traded under the NASDAQ as ticker AMZN. In the past 6 months, this one has been kind of quiet. It's up about 6%, right? So this one, I do want to say Amazon, I believe in the next few quarters, might just see another uptrend. Next, we have Apple. Apple is traded under the NASDAQ as ticker AAPL, currently sitting at $134. And in the past 6 months, it has done some great returns, about 15.68, kind of similar to Facebook. Market cap is still insane, $2.25 trillion. And that's what I'm really talking about, right? This is the biggest company. It's still giving great returns just in a matter of 6 months. Next, we're going to take a look at Netflix. Netflix is traded under the NASDAQ as ticker NFLX. It currently has a market cap of $242 billion. In the past 6 months, it's been pretty quiet, about 3%. This is another one that I feel, if earnings come out amazing, this one and Amazon can really jump up, mainly because they've been kind of quiet. I understand why they've been quiet, right? They really moved up a lot during the beginning of this COVID situation. So now they're kind of just sitting down, sitting at idle. But I think they've been idle for too long. Next, we're going to take a look at Google. This is traded under the NASDAQ. Alphabet, right? We all know. We all call it Google. This is traded under the NASDAQ as ticker GOOGL. It currently has a market cap of $1.5 trillion. In the past 6 months, this one has been a beast. 50% returns. Google was a tier 1 stock for me last year. I'm happy it was, because it definitely built up a nice position for me and has definitely been carrying my portfolio lately. The next one is Microsoft, another tier 1 stock for me last year. Facebook was also, for those that didn't know. And right now, if you guys want to know my tier 1 stocks, I actually will put a link right here. I have 4 tier 1 stocks for 2021. These are the ones I'm really opening a position in. So Microsoft right now, this I have to say is my all-time favorite out of these 6, even though I feel like so many people sleep on it. Microsoft, look at it. In the past 6 months, it has returned about 21.7%. It is traded under the NASDAQ as ticker MSFT, and it's soon getting close. It's getting close to that $2 trillion market cap, right? All these are giant companies. And so many people, I feel like, sleep on them, say, hey, Jose, these are not going to get any form of value. Look, in the past 6 months, they have provided strong returns to investments. So now we saw volatility on them. Like I said, the ones that have been the quiet the most are probably Netflix and Amazon. And those are two I'm really keeping an eye on. Those are two I don't have a position on. Just so you guys know, I do have a position on Facebook, on Google, and Microsoft. The other three, Amazon, Apple, and Netflix, no position. So next, I wanted to take a look at what normally I do a closer look at fundamentals, right? All these companies are great. They have positive cash flow from operations. They have a strong balance sheet. So the only thing I really care about is how that revenue growth is going. So I kind of put them in least to highest. The one expected to grow the least is gonna be Apple. Analysts expect 5.6% revenue growth for this one for the next 3 to 5 years. To me, I might get some hate about this, but Apple is probably my least favorite out of these 6. The second one that is growing the slowest is going to be Microsoft. And Microsoft is expected to grow at 10.2% on average for the next 3 to 5 years. That's some decent growth, right? And like I said, Microsoft is definitely my favorite at the moment. The third slowest is Netflix. Netflix is expected to grow 13.7% revenue for the next 3 to 5 years. So this is it's moving along, right? I consider a nice growth stock anything over 15%, and then like a super hyper growth stock, anything over like 20-25%. So 15% growth rate or anywhere near there, to me, is starting to be considered a form of growth stock. Netflix is almost there. The third fastest is actually going to be Google, coming in at 14.2%, getting close to that growth rate. Second is Amazon. Amazon is expected to grow at crazy levels, 14.3%, and the fastest growth right now is expected to be Facebook at 15.4%. So now let's take a look at price targets. I want to see which are analysts less bullish on at the moment. And right now, the least bullish they are on is Alphabet, Google. And I'm actually surprised by this. Google right now has 31 analysts looking at it. And out of those 31, all of them give it a buy, 0 give it a hold, and 0 give it a sell. So it's a strong buy. The average price within the next 12 months is about 2,417%. We saw Google has pulled up a nice amount in the past 6 months. So right now, this is only expecting about a 5.8% growth rate from where it's at right now. This one that analysts are second less bullish on is going to be Microsoft. Microsoft has 23 analysts. All 23 give it a buy, 0 give it a hold, 0 give it a sell. The average price is $284. This is about a 9.5% increase compared to where the stock is at for the next 12 months. Next in line is Netflix. Netflix, though, is a bit different. This is the first one that has 33 analysts, and not all of them give it a buy. 24 give it a buy, 5 give it a hold, and actually 4 give it a sell. So this is a moderate buy, but it's a little bit more bullish, right? From its average price is $620. That's about a 12.9% returns from current levels within the next 12 months. So analysts are getting bullish on this one, right? Netflix seems to be good. Next, we have Facebook. Facebook is coming in pretty good. 34 analysts, 30 give it a buy, 4 give it a hold, 0 give it a sell. The average price, $344. That's about a 13.9% growth from where the stock is sitting at right now. Now, this is getting interesting. Right now, we're getting closer to those funnel levels. Next, we have Apple. Like I said, I mean, it's pretty crazy. Analysts are still very, very bullish at it. There's 25 looking at it, 20 give it a buy, 4 give it a hold, and even 1 gives it a sell. I'm not gonna lie, I thought this was gonna be unanimous like Microsoft, where they were all buys, right? But no, here we got some holds, we have some sales. The average price is $153. That's still a 14.2% growth rate from current levels. So now the next one is gonna be Amazon. This one is pretty bullish. And like I mentioned, this one has not moved in the past 6 months. So I feel like it's gonna rip pretty soon. Amazon right now has 32 analysts. All 32 give it a buy. The average price is $4,100. That is a 21% growth rate from where the stock is at right now. So this is a very, very bullish one. Definitely Amazon is one that should to be on your watch list right now. And if you don't have a position of where to add on, maybe think of Amazon. So Amazon was the most bullish in form of analyst projections. All right, so next, guys, what I want to do is take a look at valuations for these companies. And normally, right, it depends on what stage the company is in that would determine what type of valuation I would use. For these 6, because PE ratios, even though they're all profitable, PE ratios are all over the level. I wanted to take a look at more like EV to EBITDA values. And I think this kind of gives me a closer look of how all of them are doing. First, let's just take a look at current values. Most of them are kind of sitting between the low to mid 20s. The 2 outsiders are Amazon, the most expensive at like 32, and Netflix, the cheapest, at 16.11, and everybody else is sitting within those 20 values. So it's good to look at current values, but what we really care about, right, as investors, what we really care about is future growth, right? That's what really matters to us. So looking at forward values, the situation changes. Netflix goes from being the cheapest to being the outlier and becoming the most expensive. The cheapest actually becomes Facebook. Facebook comes in with about 14.76. So Facebook looks very great in forms of valuations right now. I do think Facebook, even though it has seen a nice pull up recently, is still at a great price to at least enter some form. Hey, next one, the next cheapest is actually Alphabet. We saw Alphabet, Google, right, done a nice pull up already. Analysts, unfortunately, I'm not that bullish on it, but this is the second cheapest, sitting at 17.01. The next 3 are very tight around that 22 mid 20 levels, and that's gonna be Amazon, that's Apple, and that is Microsoft. They're all sitting there. To me, like the cheapest out of those 3 is Amazon by a few values compared to Apple. So we can see valuations don't seem too insane. Most of them have pulled back. All of these are sitting a lot lower than they've normally been in the past few months. Even Google, even Netflix, right, which is at the highest out of the bunch, is still cheaper than where it was a few months ago. So that's what I'm super excited about. So now let me share which 3 I would purchase. First, Microsoft would probably make it the list. I would always want to have some position on Microsoft, no matter how it's looking. I just feel like that company is, all their valuations aren't bad, right? It's always in the middle somewhere, in form of valuations, in form of growth, in form of price targets. I think Microsoft is a tier 1 stock. It was a tier 1 stock for me in 2020. In 2021, it's not a tier 1 stock, but it's one I definitely love to hold in my portfolio. So let's take Microsoft out the bet. Because I'm just so in love with the company. The first 3, let's take a look in forms of valuation. In form of valuations, the 3 I would purchase would be the 3 cheapest, and that would be Facebook, Google, and Amazon. Especially Amazon, because like I keep saying, it hasn't moved much. If we take a look at future revenue growth, the 3 I would enjoy are Facebook, Amazon, and Google. Again, the same 3. And in form of price targets, we have Amazon giving great returns, and we have Apple. I'm not too bullish on Apple, and then we have Facebook in the mix. So Amazon and Facebook are making a lot of these lists. Same with Google. So those are my thoughts, right? And those are the companies I would enjoy right now if I want to escape some form of growth stocks at the moment. These are doing great right now, and I do believe they did great while growth stocks were doing good. So these have been some monsters. These are ones that are profitable, positive in cash flow from operations. So even though, right, all this scary stuff of high interest rates might not be affecting these stocks as much. So I hope you guys enjoyed. Take care, have a good time, and see you next time.